Hi everyone, this is Darren from Fast Track Property. I did this video a while back, but after reviewing it, I realized that it has still a lot of applications and very relevant in today's market. So here it goes for you to take a look, for you to plan your real estate cycle or property investment better in Singapore, right? And to really help me out, do hit the like button and subscribe to my channel.
Hi everyone, what's up? This is Darren from Fast Track Property, where I transform your life and improve your destination. Okay, today I'm not going to talk too much about property, just a little bit, but what I'm more excited to share with you about is that it is very timely for me to share this with you because of the current crisis that we are going through. Alright, so a little bit story about myself in the past is that back in the SARS period, back in 2003, 2004, I was really a young adult and I wasn't really aware of what's really happening. At the time, unfortunately, I wasn't in a position to take advantage of the crisis, right? Then we move on to the Lehman Brothers that happened back in 2008, 2009. At that time, I was already in the property industry, but unfortunately at that time, I was in the wrong segment. I was doing a lot of HDB transactions and I didn't really know what was property all about in terms of the private sector, right? So this was actually kind of what was happening to me, and I told myself that I didn't want to miss the opportunity again, and that's why I started to read up a lot and to understand how the inside of property for the private and commercial side works in Singapore. So back to today. Today I'm now at an age where I'm not aware of a situation where economists of the world does move in cycles, and whatever comes down today, it's really exciting. All right, I am very sad, all right, in terms of the various situations that we all face at this moment, but it is also at this point in time whereby there is a lot of opportunity if you're in a position to take advantage of it. Okay, so they've already just announced a lot of businesses going to shut down. Many countries has closed down its borders, right? I'm also affected in my business because I have some workers stuck in Malaysia. They can't come in, and I have to just do the best out around it, right? I told my staff I couldn't increase your pay this month. I actually agreed with them before the Chinese New Year, but I told them that I could then reduce their targets so that they are still able to take back a substantial amount for them to be able to have their livelihood, right? So this is what I'm facing right now, and for today it's even worse. Now I have to do social distancing from customer to customer, and therefore the number of people we could service every single hour has actually shrunk, right? So this is what is happening today, and at the same time I was very excited because for the past 3 weeks, I've been monitoring a share which is DBS, okay, and before that was also SIA. Now, before I continue this, something happened back in 2019 in August. So, as you know, I know about Warren Buffett. I've been reading about him. So something at the time jumped at me, right? When I look into this article actually talks about Warren Buffett, for the first time in history of his company of Berkshire Hathaway, is sitting on 122 billion in cash, and this was in August 2019. Now, analysts are saying, why is he doing that when Warren Buffett is always in the view of cash doesn't make him happy? He always believes in reinvesting that monies into companies for a great discount, or companies that has very good potential and very strong fundamentals, right? So this was him, and I look at it, doesn't make sense. Why would he be holding so much money? And another school of thoughts at the time, other analysts was actually saying that, is there something that he is predicting? Is he something that he's preparing that could happen back in 2020 that he is getting ready for? Okay, so at the time when I saw this, I also told myself, something is going on, right? But I don't know what it is. My network is not so large. But I told myself, just be prepared. If something's happened, I do not want to miss a chance back during SARS period where obviously there's a very good reason I wasn't in a position to do it. But in 2008, 2009, I got friends, I have fellow salesperson that made a lot of money flipping properties, taking that risk where I didn't have the guts at the time because I didn't know what it was all about, and I didn't want to miss this opportunity again this year, right? So what did I do? I zoomed directly into it, and for the past 3 to 4 weeks, sitting down with my friends, looking at the stock market, right? Okay, and getting very emotional because that's what everybody is doing it, right? I'm looking at videos where the people has made Tesla from $300 to $900. It's tripled their money, and right now it's fallen all the way back now to $300. So this is the roller coaster which I was also very worried about. And in the initial days, in this past 1 month, I was actually looking at SIA. Then I was really concerned because it came down from a $10 stock to now a $5 plus stock, right? And I got worried because they only rely on a single source of income, okay? And I didn't like to risk money over here with the outlook of maybe I have to hold this stock for the next 5 years, right? So I changed strategy, and then I and my friends decided to look at banks instead. So we're looking at DBS Bank, right? So let me just share with you a little bit about DBS Bank. So for DBS Bank, this is a chart, right? Today is the 25th of March when I'm recording this, and this is the price chart right now at 19.03. Okay, the all-time high you can see is actually about $30 close to $31, and the all-time low for this past 5 years was at $13.58. And right now we are looking at it coming down perhaps to the low of $15 plus minus back in 2016. We are not so sure whether it could come down to that amount, but even at this price of $19, or at the time when I was looking at it at $18, it was something that analysts were saying it was a very good buy. It's already below the intrinsic value of this property. It gives a very good dividend yield, about 5 to 6% a year, right? And with a P ratio of now only 7.72. Okay, so DBS was something that I personally was looking at. Okay, I had to call my agent at POEMS, and the funny thing was that when I logged in at the time, I forgot my password all right. I've only been trading for the past 10 years. I reactivate that account, all right, got my funds ready, and then got so excited looking at it and just looking to purchase this stock anytime today, all right, or the next few days anyway. And after that, what happens was that I had to step back and ask myself, am I being too emotional, right? So let me just go through with you the numbers. Let's take for example, if I bought a single share of DBS last week, for example, right, about $18. Okay, a share will cost you $18, 1,000 shares will cost you $18,000, and 20,000 shares will cost you $360,000. Right, so this was the amount I was looking to purchase and to hold for the next 5 years. And what would the price target be? I'll be asking myself that I'm actually very happy if I can hit $25 and I'll exit. And so if I'll exit at $25, right, I will get a profit of $140,000. So $140,000, the ROI will come out to be about 38%, I think, plus minus, right? And if you divide it to per year, it's about 7% per annum returns, even without including the dividends I'll be receiving. Okay, so I was thinking, not a bad deal. Why not? Let's just do that, right? Okay, so but what actually made me pause was that I asked myself, was this the right way to do it? Right, as you know, I didn't like to use my own money to invest. I'll be locking up my own money of $360,000 for the next 5 years. Of course, if it can happen earlier, it would be a bonus, right? But I had to have a timeline of 5 years. Okay, so this actually got me. I called myself and be so emotional. Sit back and really think about it, right? So I started to do more research, and I actually rewind back and ask myself, why do I have to buy this? If today, could I actually think of buying a commercial property instead? So I look back, I've been looking at commercial property for the past 1 year, and it's really out of the affordability that I have, because it's all in cash, right? And therefore, I look at it periodically. And when I went back today and look at it, I realized that the whole business cycle and the domino effect has actually reached the business owner, right? So what happens is that last 2 weeks, I heard from my banker, right, that there's a lot of margin calls for business people, all right? A lot of them are speculating in the stock market, and therefore a lot of margin calls has been raised. And secondly, with businesses that are affected, right, most of the F&B businesses, most of the entertainment businesses are all going to be closed for the next 1 month. And how is this going to hit them hard? So as you know, when the stock market comes down, all right, next will be the property market. Okay, so if you didn't take my advice the past few times to keep aside crisis fund, right, you realize that this is a period of time whereby there is a very high risk of you losing your job. All right, some of you are getting a pay cut already. All right, and then you might be now strapped of cash to sell your stock market, your stocks today at a really low price, or in the worst case, if you have your back against the wall, you are being forced to actually sell away your property just to survive and to downgrade, isn't it? All right, and these are just the worst times if you did not prepare that crisis fund for every single property, like what I do for all my customers. If you did, you will know that, like I said, that the economy moves in cycles. What goes down will have to come up. And if you had a crisis fund in your CPF, or you have it in cash ready for the next 1 to 2 years, all right, you're in good hands. You can ride this whole down market and it will go back up, and that's where you can see and capture that rainbow at the end of the bridge. Okay, so my thinking was this: I wasn't worried, but I was kind of wanting to be an opportunist and look outside at who are actually suffering, who didn't plan out well, and I'm able to then purchase that great property today. Okay, so I ask myself this question: for $360,000, if I were to purchase stocks, right, I could actually change that into a quantum. If it's a residential property, it's about 1.4 million. All right, and I can do that even for commercial property too. If not, I can increase that to $2 million and have it come out more cash on top of it. Right. So when I looked at it, I realized that for this fund, when I looked at the commercial property, I was quite surprised that there are actually some good units up for sale. Okay, that is actually very near to the Aljunied MRT station, and I wanted to explore that before putting my money into the stock market. Okay, so two things I wanted to share with you. Number one is that I personally felt that I could have a better gain if I were to purchase that freehold commercial property, right? Because I do not want to buy a leasehold for a commercial property, right? So I think that would give me a better return if I were to hold the same time period for 5 years, right? This amount can give me 140, but I believe that over here it can actually pick up and get much more when businesses pick up in the future. Okay. Next thing is that why do I always think that? Why is it that we should always do things with our own money? It doesn't really make sense. So I had this dialogue with a customer yesterday, and they are also asking me what should they be doing? Should they go into the stock market, or should they buy a property first? Right. My advice to them is this: stock market, you can buy as low as 100 shares, correct? But why do you have to use your own money? Does it make more sense to actually purchase that bigger ticket item? Because it takes longer for you to achieve that, number one. And two, you can actually leverage off a CPF to assist you at least in the initial down payment and start to pay off cash in the near future, right? So if you do that, it makes more sense. So when I rewind to about my particular story about how I can position myself to take advantage of this economic situation at this point in time, is that I have various properties, as you are well aware already, that has been purchased back in 2014, all right, and meaning to say that over the years, this has accumulated in terms of my unseen passive income, whereby my principal has come down. So for example, if I have owned this property for $1 million, and say for example, I took on a loan for 800k, right? So over the past 6 years, that loan has dropped to about 700k or even 650 for the matter. Alright, so let's say it's at 650. Today, the valuation is still at $1 million. Okay, and because it's a full commercial property, it's all cash, I can go back to the bank and take out a term loan for it. Alright, this is an equity loan. So what they could do is that the difference, they will give me another loan up to 800k. So I have a first loan which is at 650, and they give me another loan which is 150. So I'm back to the original of 800k, right? But the difference now is that I have taken back from the tenants 150k that they have been paying for over the past 6 years for my property. Now I use the 150k. I know that the rates of the loans are going to be very low because for term loans, it's packed together with the mortgage loan, right? So it's going to be less than 2% to pay for it. I take the 150, I reinvest into the stock market where I know that it's going to go up in future. All right, take the dividend that the company is going to pay me for the next 5 years. When it goes up by to $25, right? Guess what? I've not used my own money to buy this share. I've actually used my property's money, accumulate over time, buy my tenants' money to purchase these securities. Okay, which I think is a smarter move. It makes more sense versus you taking your hard-earned money and putting it to risk. Okay, I'd rather risk this money because I don't have to risk my own money. Okay, so I'm not so sure whether this makes sense to you. To me, it really makes a lot of sense, right? So I put the plug on purchasing on DBS. I'm not looking out at a commercial property to see there's any good purchases out there, all right? Because this is going to I feel that this is going to be the next happening. I think this crisis will go on for the next few months. Okay, so I think there's a lot of opportunities, but most importantly is that have you positioned yourself to take advantage of this crisis, right? And if you haven't, start a plan right now to take advantage of this market so that next time perhaps in the next 8 to 10 years, they say it's every 10 years, right? When there's another crisis, make sure that you're in a position to take advantage of it and don't be so emotional like how I was for the past few weeks. Okay, so I'm just weighing my options right now, which I felt which will make more sense, and then I'll update you again what I'm gonna do. All right, so I hope you had a good time listening to whatever I'm sharing with you. I hope this just gives you some insights to some of my thoughts and processes in this particular issue in Singapore right now and the world. Okay, and I wish you all the best. Stay healthy, take a lot of vitamin C, and speak to you soon.